Björn Wallin is founder and CEO of Recall Capital, a dynamic trading solutions provider that promises listed companies lower volatility, increased trading volume, and a platform for new capital acquisition and internationalisation. Recall Capital has been working with SMEs in Sweden for 4 years, and the company is now expanding its offering through Europe. How has market behaviour changed that companies now need these kinds of services?
First of all, investors has become more realistic today than they have ever been before. They are not so blind optimistic anymore. As a consequence of that, I think the SMEs has to take more responsibility for themselves. It's not that they can count on the financial market to provide them with money, as they have done before. They now have to deal with this themselves. No one else is doing it, so it's more pressure on management and the board of directors that they actually have to handle all this to get the company financed.
Now, the New York Stock Exchange has been offering these services itself for many years. What's been its impact there?
Basically, they're doing half of what we are doing. They having what they call a designated market maker, which is a technical solution topped on with a human touch. We are doing roughly the same, having the same parameters, specialized in SME companies, but we're also using this trading solution for also the capital acquisition side. So we're creating a mini ecosystem for every company that we're having the financial market. We add on the tap straight into the market, open it up a little bit, get the money over to the company so they can use it for their operation. Create value, goes straight back into the financial market. We open up the tap again and we get the money, close the tap and over to the company so they can create it back to the financial market. So this is like an ecosystem for SMEs.
And what effect does that have on trading volumes and volatility?
So basically there are strict relations between volumes, values and volatility. And all algorithms out there in the market is actually trying to handle all those parameters. What we have done is actually we have looked at specifically SMEs. We measured 20,000 companies worldwide just to understand how these relations are combined to each other. And when we have found that out, we added other dynamic aspects as well. We're also adding on different patterns from the behavior and the trading, the likely volatility ahead. And on top of that, we also put some human touch. The result of it is lower volatility, which is super good for all kinds of trading. So I think our trading engine is more appropriate for SME companies.
And in this way, you've adapted the solution specifically for SMEs and SMEs in Europe as well.
Yes, absolutely. We're now going to Europe, but we can use it anywhere because now we're looking into the SME market globally. There's the same pattern, the same behavior is basically the same everywhere. What we have to consider from country to country is some kind of legislation or if there are certain other adjustments we have to make. But basically we can use it anywhere. So I would say we're now entering Europe. The biggest SME markets are Australia, Canada, but let's start in Europe.
And what's the ultimate benefit to those SMEs?
I think the best benefit is that the customer can actually get more focused on creating and developing their own business and let us handling the financial issues. I think that's good for the company. I think that's good for their shareholders as well. So it's a classic win-win solution.
Björn, thank you very much.
Thank you.
Thanks for watching. Find out more at recallcapital.se. Click through for more videos on enterprise management and strategy. And please subscribe for the latest international business insights from worldfinance.com.